Good morning, everyone, and welcome back to our weekly stock market brief. This is where we do analysis on the overall market, QQ, S&P 500, as well as the Max 7s. We'll be looking at their support and resistance levels, as well as the most likely scenario price will likely head towards next week. And if you guys are looking for the commodities update video, check out the video tomorrow. And let's get started real quick with just a couple of data. So not much data this week. AI is still sitting around the 40s. What we want to look for is this goes to a high around mid to high 40s and stay around there, then we potentially will have an edge looking for the short side. But at the moment, this is still not too extreme for me. You can see the historical average is 37.5, 41 is just normal. And in terms of fear and greed index, we are sitting at extreme greed. The longer it sits at extreme greed, a longer time, then the more likely scenario we might get a bigger pullback coming. So keep a watch on this. And in terms of data, CPI and PPI has been non-event most of the time now. When it just sits around 2 point something, doesn't really move the market anymore, unless you guess like a big outlier. But we likely probably won't guess anything too extreme here. All right, let's get to the charts. So we drew this red line together overall a couple of weeks ago, I think, and I said just take it as a grain of salt until we do see some price actions that does react to it. You can see prior all-time high, first rejection, the next all-time high, and then we rejected there again, and then we rolled over. We are approaching it. It's getting near it, and we do see a little bit of price action reacting towards it at this given moment. See, we tested it twice and we didn't get over it. That being said, the trend is still currently an uptrend, right? Talked about this every single week, saying don't fight the trend. As long as we are making higher lows and higher highs, right? Each time we pull back, it's another higher low, another new higher high, another higher low, and higher high. Then the bulls are in absolute full control. And every week I draw out scenarios to show you guys what the bear needs to do for the bare minimum for them to show up, and they haven't done any of that yet at all. And so for me, what I want to see from the bears bare minimum this week is to crack this pivot low on Monday. So essentially, right, this is the last higher low pivot being set, and it tried to make a higher high, which it did, but zero follow through, right? Just a puny high. So that's like the first, usually when we get a higher high lacking a follow through, that's like the first sign, first tiny red flag that maybe that's, this could be the temporary top coming in. Then we gotta see bears follow through. So bare minimum for me, get a big leg down at least, break Monday's low. That's like bare minimum for them. So create enough space, we can potentially change the trend. Get a weak bounce, lower high, lower low. So let's see if it does shape up. And we are getting a lot of tariff news lately, and so we'll see how the market reacts to it next week. But price action is still always king. So let's see if this pivot even breaks. If they don't, let's say it goes like this, right? Big leg down, crack it a little bit, and next thing you know, we just go sideways. Right? That could be a possible case. We potentially form like a longer term, right? We zoom out to longer term, weekly and monthly charts. This could be a monthly bull flag. We kind of just grind slowly down like that. We don't need like something like that, crash or something, right? Not every drop's gonna be like this, right? It's not gonna be like, oh, waterfall and then hope, and then down 20% in like a month. So when we zoom out, right, weekly chart, it's pretty much straight up since April. 30% move, and from the bottom monthly charts, pretty much a 39% move, right? So monthly consolidation wouldn't be surprised. So when we zoom out to the monthly charts, this is a straight move off the lows with no monthly consolidation. So for me, for best case for bulls would be like a monthly bull flag consolidation. It's kind of grind sideways here, um, and into like prior all-time high ranges, right? Grind down slowly, and then we touch this all-time high, prior all-time high level, and then next thing you know, we bounce with that bull flag on the monthly. That would be the best case for bulls. Let's measure exactly where that bull flag might look like. So even if it comes down to 500, it's still a bull flag because of the size of because of how much we bounced. So let's say go like this, right? Even if it comes down to here, it's still a bull flag. And that exact pretty much that $500 level. But we don't need to pull back that much, right? It could be like something like this, grind around here, it's the all-time highs, then bounce. That would be 6%. And 10% drawdown from to the bull flag. Honestly, if we drop down 10%, it's pretty normal, right? Just another small correction. We have plenty of that over here, right? Even this little blip was already like 5%. This one over here was already more than 10% roughly. Yeah, 15%. It's pretty common. So after such an extended move, right, I wouldn't be surprised if we get a 6 to 10% pullback around these levels. Or it could also, just kind of go like this, slowly grind up. But I would say we are kind of due for some consolidation. Um, but just continue to follow the trend because we have seen, right? This is 1, 2, 3, 4, 5 straight month up. 1, 2, 3, 4, 5. 1, 2, 3, 4. So probably can go up another leg. Who knows? But we are getting into that zone where it's like not as favorable if you're holding long. If you're getting into long, trying to hold for a longer time period. Um, so yeah, but same thing every week. Bare minimum for bears, they need to show up. Otherwise, it's just a continued grind. Right? Not a single time on this leg up, they showed up. Right? This is not a big enough space to drop. Right? This one is even not even a drop. It's just kind of one red day, and then we went sideways. Here was a little bit. They had a chance if they could hold it, but on the same day, we already closed. You know, back above high of the day. So that's if we close down here, then bears would have a chance to potentially form that lower high. But we literally closed high of day that day, and next day it's already back to the prior highs. So no chance for their bears yet either, right? Um, None of it here either. So last time we see any kind of bears was here, from this to here, and then after that it was just no bears. So for them to show up, big enough drop, at least break the first pivot, bare minimum, maybe the second pivot as well. Yeah, that's only 6.6% away. If they can't even do that, honestly, there's not going to be any kind of momentum to the downside. They can't even break these pivots. So break these pivots, right? And then have this whole structure here act as resistance. Break that pivot, bounce. Now we see these act as resistance, reject, lower low. And that'll be the start of some bearish actions. But for the moment, we are at that area, right? So be cautious here. But if you're a day trader, it doesn't matter. You can go whichever direction, get out, stop out, same day. But if you're a longer term holder, this is an area where you got to be cautious, where you don't want to blindly be buying in and try to just hold, right? Probably had to sit through some kind of consolidation. Wait, I forgot about SPY. SPY here. You see SPY a little bit stronger. Yeah, slightly relative strength on Thursday. SPY has other sectors, right? Financial sector, healthcare sector. They can get rotation into it. So when tech is weak, you want to see the other sectors being strong and get that rotation. Just means that money is not leaving the market, money just rotating around the market. And that's exactly what the bulls want to see. So no signs of real rough legs yet at the moment. Let's see if we can get a line here as well. We're kind of already over it, but yeah, similar idea. I mean, it's like you could say we're kind of like break above, no follow through, and we're below it again. That being said, follow the trend, right? But after such extended move, I wouldn't be surprised if we pull back for consolidation. Similar idea, monthly consolidation, right? Um, this huge mop, yeah. Even if we pull back, I wouldn't be surprised if we pull back and have this prior structure back tested and see if it acts as a support, right? So we think about we broke down from here, huge move up. So if we pull back, we want to see this structure act as support as a bull, of course. As a bear, obviously, you just want to crack through it, and then next thing you know, get a big crash, and then have that whole area act as resistance again and roll over. But for bulls, likely this area will act as support. So honestly a 5 to 8% pullback wouldn't be surprised at all for SPY. Obviously, the Q is going to pull back more than that because they're just more volatile. But 5 to 8% for SPY, I wouldn't be surprised at all. And but same thing, bare minimum for bears, we want to see at least crack this Monday's low. You can break Monday's low, and we have this puny tiny consolidation by 2 days right here, right? Just break all those at the same time. I mean, like if bears can't even do like a what 1.5% day after a what is it like a 20% bounce? Let's see, 23% bounce, right? If they can't even have 1.5% day down, they're really not showing up. So yeah, so let's see if they crack this 617 and break the 615, break this EMA 12 as well. Right, it's just been bouncing off of it, bounce, 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 bounce. Did he even touch it this whole way up? That's how strong the market has been. So yeah, so break below here, and then when we finally bounce, get that whole area act as rejection. There's gonna be a lot of support here as well. So this whole cluster of volume been trading for like what 2 months. So a ton of dark pool here as well. So if price starts closing below this, then that's a bigger red flag. At the moment, bulls are in absolute full control. That being said, we are kind of getting to that area, right, of resistance where maybe temporary tops. So let's give us more clues. Check out on the Max 7s. So Max 7 is pretty much the biggest weightings in Qs, and we'll get more clues. If the Max 7 charts are starting to look a little bit more weaker, that may give us clues where Qs may start to pull back soon. All right, let's start with Meta. So Meta, okay, so this made a new all-time high. We talked about it last week, but slightly lacked follow through. So this week it tried again. It looks like it's not getting over it. So usually we call this just like the tiny initial red flags where bulls aren't getting follow through now. But bears need to show up, right? No follow through doesn't mean like it's game over. Right? We had one over here, right, where it's like, oh, lower high here, no follow through, and then just kidding, right? So bears need to show up at least to break any kind of pivots, right? You can see the Friday's low. Try to break this pivot, right, and then nobody follow through on the downside. So what you want to see as a bear here, similar idea, break Friday's low. Get this big up. Try to confirm a trend here. We did break this pivot low, but right when we came down to it, we hit the top of this range. Prior resistance, support, acting as support now because price is coming from above it. Prior resistance is going to act as support, right? So if the bears can't even crack the first, right, the first structure, really not going to go anywhere. So let's see. So bears can break below the $700 level and follow through. Then Meta is going to probably start to weaken a little bit and then test this 686. By the moment, no signs of that yet. You can see we did break this quadruple bottom low, where we went sideways for a whole week, and then bulls tried to bounce, right? We bounced back right up. So no follow through again from the bears. Let's take a look what it looked like. Okay, just pre-market. That being said, we do have a little bit of an hourly downtrend here in structure wise. Go down. All right, you can see it hourly is kind of rejecting from the 12 EMA, pretty much picture perfect. So that is showing a tiny bit of bear control here, a little bit, especially when it's like to the tick on the EMAs. So it's kind of like the first time we're seeing that. Let's see. It's kind of like a sign where like algos are pretty much selling it and do it, or shorting and do it. If it's like to the tick, where it's always right EMA 12 rejection, 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 rejection on the smaller time frames. Yeah, we haven't really kind of like a little bit like over here, but we have and we ended up having just a tiny bit more follow through. But this is just an initial tiny sign. What we need to do, right, is break. We did break this bottom, but that was around like the pre-market or during the first hour, I think. What I want to see is break below here again, and then this whole structure acts as resistance, which is starting to show. So you can see like after this bounce, that was it. Bears are kind of like starting to grind back down again. So once this whole acts as resistance, right? Top resistance, 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 which it rejected here, right? Here again, like 720. And then we can break this 713. Then that would be a little bit of follow through now from the bears. Then I can zoom out to the daily charts. They can do that. So yeah, so we're seeing a little bit of sign that they may show up on here on Meta, and then they can follow through or looking back down to 700. Yeah, so be a little bit cautious on Meta next week. And let's take a look at Tesla. And it looks like our tightening range is still tightening. Been talking about this tightening range for, when was this? Let's just say months. So big move up, big move down, does not exceed the prior lows. The big move up does not exceed the prior highs. The big move down does not exceed the prior lows. Big move up does not exceed the prior highs. Big move down does not exceed the prior lows. Right. So this is what tiny range characteristic of it is, and we bounce again. So it's going to continue to tighten up until one side of it breaks. But for me, I would say because market is hitting all-time highs over and over, and while Tesla is in a tiny range, when the Qs do pull back, right? Look at this, right? Qs has been like what ripping, right? So it's gonna pull back at some point, right? It has to. Like it's not like it's like guaranteed. We just don't, obviously we just don't know if it's gonna make another leg up, then it pulls back, or it's gonna pull back here, right? When it does, Tesla has just been tightening up. So the question is, can Tesla withstand like a 10% market pullback, right? Or is it going to just break this tiny range on the bear side because the market is going to drag it down, right? And because it's already in a relative weaker stance, right? It's just been going sideways essentially while the market is hitting all-time highs. So when market pulls back, it's less likely that Tesla is going to be able to withstand that. So it'll be dragged down with it as well. That would likely be a bear break of this tiny range. That being said, right, this past week has been bouncing from this tiny range, so this didn't crack this low. So if it keeps continuing to bounce, we'll likely come back up to 329's area, and continue to tighten up. So yeah, this can be more picture perfect tightening range. Continuing to tighten up. I mean, it looks small, but the ranges are big, right? 18% just from this drop. It has room up to like another 18% up to like 340s if it continues to tighten up both ways. These bounces. All right, let's look at Amazon. A little bit stronger than his peers, right? Made a new high while Meta was red. If I can just adjust this a little bit. Yeah, there we go. So I guess we're still under resistance, even though it made a new high. Resistance, 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 resistance. Rejected again. So for me, for bulls, just get over. I mean, you guys are in full control pretty much, but we are underneath this all-time high resistance. Right, this low is pretty much where we just got rejected from. This all-time high structure right here, prior all-time high structure. So right, very clear. This low was set pretty much right here. So this 225, which also coincided with this uptrending resistance at the same time. But really no red flags for me for bulls at this given moment, because it just made a new high and it's been in an uptrend ever since we bounced. Let's see, I don't like this as much, but we can say it's in the rising wedge. Essentially, it's just the rising wedge is at higher highs with no follow through. Right here to here made a new high, barely any follow through. Right, it's just a tiny bit of new high, and we rolled over. Made a new high, one leg up, and then we just kind of went sideways again. Same thing. Made a new high here, kind of just slowed down. It's just a characteristic rising wedge. But again, no signs of red flag. What we want to see as a bear, roll over here, break 218 for me. That'd be first step for bears. Right, 218, resistance, resistance, resistance. Boom, breakout. Now it's support, support. Right, you can see active support on this day, active support on this day. So when it does roll over, we want to see 218 break for bears. Then that may be like the first sign. Okay, right. Break the rising wedge, resistance, rejected again. No follow through here, plus a bear break, rising wedge, and then break the first level support. Okay, now we can maybe start looking for some bearish trades. But for now, no signs of that yet. And for bulls, just break above here on rising wedge and try to test this all-time high structure. Breaks there, we'll probably come up to 230. All right, let's take a look at Google. I want to say, yeah, I guess a little bit weaker than its peers. We're still battling this same old resistance for the past couple weeks. Haven't even tested the prior all-time high structure yet, right? This guy is pretty much like the gateway to this prior all-time high structure, but we can't even get over that one yet, right? Low of this structure hasn't even really been tested. Slightly, right, getting close to this 180, but very clear resistance 180 for Google. If it breaks about 180, I'm looking at 185. But again, it's kind of just going sideways while the markets, right? Q's been making the all-time highs while this traded the same area as June 10th. So slightly weaker than its peers. So yeah. That being said, let's see if any. Yeah, still no bears either, right? No signs of real bearish. They're just kind of going sideways. What you want to see as a bear is to break this trend line here. Bounce, 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 bounce. So reject from 180 again, and then roll over, break this trend line. break below 172. That'd be like the first bear break. And then we'll come back to test this 167 again. For bulls, very clear, 180. Break above, go to 185. All right, Microsoft. Not slowing down at all. We talked about the bare minimum for Microsoft is just to break the EMA 12 every week. I said, okay, bears need to break just the EMA 12. Just break that EMA 12. Nope, still bouncing off of it every single day and continue grinding off of it. And when it does get a bear break, it's going to stop or a lot of people out. So yeah, the longer it doesn't break, the more obviously the more pent up energy there's going to be. And when it does break, it'll likely stop. Get a couple stops. First stop is going to be there here. It's going to be like a lot of stop losses around this 488 zone. So we're going to be bunch at 500 mark too as well psychologically. Not as much actually. We already tested that a couple of times too already. So when we do roll over, break the EMA 12, right? It will consolidate on the monthly charts because I mean, yeah, it will consolidate on the monthly. It's Microsoft's been known to like just make big balloons up, right? Monster move up, bull flag, and the monster move up, another bull flag, and then it kind of broke down here, consolidated sideways. So I wouldn't be surprised when we get consolidation on the monthly charts. Even like here, man, like, let's just see. Okay, it's a 30% drawdown, right? Okay, we knew what happened there. Even 15% drawdown here, just a little blip, monthly consolidation. 17%. So yeah, wouldn't be surprised to get like a little bull flag on the monthly consolidation. Yeah, similar 10%. So but yeah, I'll watch on that. The problem is that if we get that 10% pullback, right to here, then every buyer is kind of like in the red because right where we're back down here. And because we have a big gap here, all the volume is pretty much from here to here. So we get a problem is to get a 10% drawdown. Most of the buyers are bought above this gap. So that's kind of like the problem where it might exacerbate the selling. And then we have this just no volume down here. Even though it's like a monthly bull flag, that's the problem is all this volume is from, after after a 25% bounce, then kind of like the volume came in, right? So a little bit of problem there, and we'll see how it ends up playing out. But for now, bulls are still in absolute full control. And all-time highs, like I said, no resistance, so it's easy grind up. I think the only way to stop this grind is probably when the market does pull back itself, when the Qs. So we're kind of getting to that area, right, for the Qs. So we'll see if Microsoft a similar idea, getting to that area, a little bit close to it as well. Maybe you'll actually make one more leg up, like 2.5% to this green line. Just the prior all-time highs, right? Prior all-time high to the next all-time high. And maybe it'll mark it as well here around here. Doesn't have to. See if we can just a little bit. The wick. Yeah, it's the same thing. Now let's just say it's near it. All right, so look at Apple. So Apple still hasn't gone over 214. They tried on Monday and it failed, and it's continued going sideways a little bit. So maybe you'll give it a shot again, probably this week, to try to get over 214. Very clear resistance. All of his peers are trading up here. And Apple is still trading near like the tariff reactions. So yeah, we have seen Apple relative strength when the market does pull back. It has done that in the history more than we've seen. So that could be something that happens. But for it to act this week, while the market has been making new all-time highs almost every day, I don't know if we can do it this time. So we'll see. If the market does start pulling back and Apple kind of just goes sideways, then it might be gearing up to do that, because market pullbacks doesn't just go straight down, right? So let's say market pulls back like this, and then Apple is kind of going sideways. Market's gonna bounce to make lower highs, even if it's gonna, let's just say even it's gonna continue to go even lower, it will still bounce to make lower highs, right? Lower lows, and when it does make that lower high bounce, this will likely break out, and kind of like support the market if it goes sideways while we get a big pullback, right? But that, we don't know that yet. By the moment, still underneath 214 resistance. So for me, Apple is just going to be continuing to be a range trade if it doesn't break out of this range. Clear support, clear resistance area, and everyone's been waiting to see which way it breaks for the last 3 months. All right, sticking to Nvidia. All right, let's see here. So similar idea, all-time highs, no red flags. No resistance. Bare minimum for me, similar idea. I talked about this every week. Just break the EMA 12 for any kind of bearish reactions, right? Pretty much bouncing off of it every time we hit it. Bounce, 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 bounce. And this whole move we haven't even touched yet. So, although we did see a upper wick, but the upper wick doesn't matter, right? These two candles are even worse than the upper wick one. And guess what? We made new all-time highs. So what will start to happen is this upper wick plus a big drop plus it breaks the EMA 12, get a weak bounce, then this is the area where you would start to potentially short. And when we get that bounce, you want to see the EMA curl over, act as resistance. Hit that area, zoom into the smaller time frame, and then you can see some kind of structure forming resistance. Then you can shorten that area, put a stop loss over it, and if it rolls over, get the lower low, you might just caught the temporary top. But if it bounces, you just get stopped out for a small loss. No worries. Versus trying to figure out where the top is. You short in these areas, short, 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 short. Next thing you know, you blow up your count, right? So just be careful. Continue to don't fight the trend. Pretty much is the lesson here, I guess. Yeah, just follow the trend. Price action is always going to be king, regardless of what the news is. If the trend, is up, just follow the trend. Price action, and especially when it's an all-time highs, because there's no sellers trying to bring it down. That being said, I wouldn't be surprised if we do get a big pullback, back test of this higher all-time high structure, and then for it to act as support, right? Probably go like something like this: big pullback, bounce, go sideways here for a little bit, consolidate through time, and then and if it wants to make a new high, you'll probably do that, kind of like something like this, and go down, right? Hit this area where all this volume is, act as support, and we get a big bounce on the monthly. And maybe I'll make a new all-time highs if we get more catalysts. Our earnings coming in as well. If the earnings continue to stay strong, this will likely be what it will look like. We'll see. We just need bears to break the EMAs at least for me to look the other way direction, or like some kind of a big enough drop where it gives me enough space to work with. But for now, yeah, no signs of that yet. Let's give it a moment. All right, feel free to ask any questions. That's got it for you guys. Feel free to check out the commodities update video tomorrow, and feel free to like, share, and subscribe and support the channel. And if you guys want to learn more about tech analysis, check out the Patreon link. And I'll see you guys tomorrow. Have a great rest of you guys' weekend.